Greetings, family. So we on the market right now, and I just hit take profit, and I had an idea to just show you exactly how this played out, but also to educate you, family, because I was able to identify a very beautiful work of schematic on the chart on NASDAQ, particularly. As you know, I'm a NASDAQ specialist. And also we have the earnings report, and I wanted to clarify that to so many people and how you can take advantage as well as in your personal trading. Of course, we also had Tesla being released. Of course, they lost about million viewers or users, and it really had an impact on the market. Some of you guessed it right, and I want to show you how to take advantage when it happens next time. Okay, family. So as you can see, I'm on my NASDAQ chart, and I'll just be talking you through on how I took this trade because we want to make it as educational as possible. Okay, so the first thing, as you can see, I have the Wyckoff schematic here just highlighted for you, and I'll explain it in a few. And I took my trade, of course, with smart money concepts. Okay, so let's start here. Just for you to understand, Wyckoff schematics was designed by Richard Wyckoff. So it's his concept years ago, like 100 years ago. And as we can go along here, it basically speaks about when we can identify when the market is in a strong rally and starts to slow down to kind of give us a change of trend. And as we can see right here, we have the PR, which stands for preliminary resistance. So that's where we see that a lot of rather traders or sellers were trying to push the market down all over here. And of course, as they were trying to push it down, the market, of course, pushed through. And as you can see here, I have my buying climax. Okay, so the buying climax, I just took this highs, and as we can see, we have the automatic rally or the automatic selling rally. Okay, all over here. And of course, as we go up, we create the highest high, which is now our up thrust. And of course, as we can see the change of trend, hence I begin to highlight that this was a change of character, okay? Change of character, because we're getting it from creating that higher high to now this being a lower low, and it was validated by the secondary test being a lower high. So we have a change of character. And as we had the change of character, we had another lower low, which was the BOS, the break of structure that the market had created. And that break of structure was facilitated by an order block. Okay, so the order block presented the best timing entries. So I teach a concept where we're talking about timing entries and how to get injection of momentum within my mentorship course. And by the way, if you're interested in learning, we have our first online course being launched on our website. So make sure, guys, by Monday it will be up. I'll tell you all about it, as well as we do explain in depth the very same concepts that I'm teaching right now. I explain on how to take advantage, how to identify it, and how to get the best entries thereof. So with that being said, let's just go on right now. As you can see, this order block is what I identified, of course, guys. And just to identify, or rather to understand an order block, it is a candle that induces traders that the market was going to be going up since we had an uptrend. So this candle, the market broke it, breaking that whole structure. And a lot of buyers could have thought that we are now going all the way up. And with that, the market just pulled back into it. And I set my entry at equilibrium. Okay, so I set my entry, and as you can see, this was a 4-pip stop loss all the way. My target was at 21 ratio right there. And as you can see, the market came into equilibrium of that order block, and it dropped all the way. I'm just going to play it back for you guys as we're just explaining this, right? So as you can see, that order block, it has broken structure already. So I'm anticipate that it can still come back into that. It took, of course, it was still creating this up thrust and secondary thrust. It took this highs right here being our liquidity, right? Most people could have thought that, of course, we are going to be selling, hence we had those equal highs and the market spiked into it. This could have easily been a nice liquidity that the market could have taken. I'll just give you an example just to show you what I mean by the market taking liquidity there. And I just hope you still find this video very educational. If you're still watching, guys, make sure that you get to subscribe, like, and also share this video with different people. As you can see, that was gonna be a point. Let me just play it. If it was doing this, a lot of people could have thought, oh my God, that is a double top, or even give you a bearish candle like this. Many of us could have concluded that this was going to be going all the way right there because it was going to be turning around. But of course, this was what we call retail sentiment that smart money uses to take liquidity. And as we can see, smart money did that. And that whole place where it was creating that liquidity, we had it creating that upthrust for us. And as we can see, creating that upthrust, it gives us lower lows. And that lower low now creates a lower high, which creates the secondary test in the Wyckoff schematic. And then since it created that secondary test, it breaks it to validate structure that this is a change of structure. And because we have that change of structure, I was just looking for an entry when the market, of course, in the morning within the London session. And of course, as you can see, that entry when the market started to pull back, a lot of traders here could have thought, well, the market is still going to continue up because that's what the textbook trading says, retail trading says. Okay, so you have this supply right here, the market is going to go up. So a lot of people could have put a lot of buy orders right here, but the market didn't do exactly that. It created what? It created an order block out of that. As you can see, smart money was in. That engulfing candle tells me smart money was in. And with that, we can anticipate now with my timing of entries, and you'll understand this better when you join our mentorship course, guys. Either as we launch it or later on, you won't regret it. We're going to be, of course, showing you guys real people, real results, which is a series where I interview some of my students. I've done master classes before, and I'm going to be interviewing them. They want to be showing results. They want to be showing their entries and sharing their experience, what happened after they were trained by me, your brother in the kingdom, right? So going back to that, identifying this, it broke the structure. I just want to wait for it to come back into that. And at the time that it went back into that, it is the exact time that I teach injection of momentum. And of course, I set my entry at equilibrium, and of course it triggered the trade. 4 pips stop loss, as you can see, 4 pips. And of course there, that is 99 points, or rather 99 points, which is just 21 ratio right there. And as you can see play out, the market went straight into my take profit. Now initially I anticipated that the market will go here, and I believe it will still go all the way to that POI, right, where it will just mitigate it right at the New York Stock Exchange opening bell, which is going to be taking place anytime soon. So this was my initial, as you can see, we do have this Fibonacci level. So I kind of use a very unorthodox but very profitable way of taking profits. And it really makes sense according to smart money concept, right? To say, when we're getting into from this 23 level all the way to the 0, this is your buying zone. This area right here, it's your buying zone. So I normally just want to take my ideal take profit right here, even if it goes all the way. And it was kind of really enough because I do have targets as I am trading prop firms. I trade with the funded trader. So some of you were interested in seeing my trade screenshot or how I took this. I'll be doing a whole series where I trade with my prop trading account, a 50K account with a funded trader. So make sure as well, guys, we do have a link. So if you want to sign up, you are going to get a 5% coupon when you use our link. So definitely you can make sure that you get that there. And I believe as of Monday, I'll be sharing that series on how I take real-time trades. I analyze, I show you how the market really played out. Okay, as you can see, I just want to go back all the way just to show you my 1:21 ratio that hit on exactly that, and the market started bouncing off it. And I believe, of course, you're really finding this video so far really educational. And I also use extra confluence, right? As I explained within my fundamental video, I'll just put it right here. So NASDAQ fundamentals, where I talk about NASDAQ earnings report, where Tesla being released, with Netflix showing us that they actually lost almost 1 million viewers, and that, of course, that is a negative report. Tesla appeared to be overbought. And of course, we do also go in depth to explain that within our mentorship course, where we show you how to take advantage of fundamentals, how to read them correctly, of course, and to understand the influence they will have on the market conditions and the direction. Okay. And of course, it was quite clear that the direction there that were given on the earnings report, and I'll be going into explaining it as well into this video as we go on. I'll just show you on my phone right now. Okay, fam. So we on investing.com right now as we speak. And I just want to go to Tesla here under the NASDAQ influencers. Okay, some of you guys have watched the video, go along. I'll just tag it along on the top of the screen. So I went to Tesla yesterday. They had released it. You just want to go all the way to the earnings report right there. So let's go straight into that and you exactly see. So the earnings report was released, and we actually get to explain this in depth right on our mentorship group. But you'll understand that when it appears like this is overbought. That means that when this comes out, the market is going to start selling like crazy. Okay. But there are other factors that also contributed to the market selling. We had Tesla, right? Netflix that had, in terms of news, they will show us that a lot of people actually, they lost a lot of users due to it. So there are news there that show that. I'm not sure, as we can see, other news that will appear, but basically what happened with Netflix is that they lost, as you can see, the revenue there came out negative. They lost a lot of viewers, almost up to 1 million. And this added up to the confluence that I had. We're still going to have a lot of confluences as well when it comes to this. Okay, family, so I just hope that you were blessed by the information, even though it was a bit fast in terms of how to really apply this. I will do a video that will tag along this on how I will explain the Wyckoff theory. It's everywhere, but as well as we show you to take advantage of it in our course, as well as the timing of entries, as well as just mastering smart money concepts. I'll also do a highly requested video where I talk about what is smart money concepts and the benefits and the disadvantages of trading smart money, and my honest review so far. I've been trading smart money concepts from being a retail structure trader, right? It's been amazing, but I will also list the benefits and why I had to change along. So anyway, of course, guys, if you're still watching till this point, that means that you're just liking this content, and you definitely should be part of the family. Subscribe. More educational content is going to be coming your way, guys. We specialize in smart money concepts, fundamentals, and self-development as well. More self-development content is coming your way. Just make sure that you also switch on that notification bell to get every video, and you're going to be the first one. God bless you. See you on the next one.